That we have Senator Carol Liu here with us today. I think a lot of you all know her. She has been a public servant for decades at the state and local levels. She's been a champion of issues affecting women, affecting children, and she's really passionate about improving the lives of working families in our state. And I think she might tell us a little bit about a hearing she's holding this afternoon. So thanks so much for being here.
Thank you so much, Ann. It's my pleasure to join all of you this afternoon, and I'm delighted to share this stage with Senator Gil Cedillo, who's also making his way up here. And Professor Apolos and Dr. Sean Alley will also be, and John, Sean, will also be at the hearing that we're having at 1:30 over in the Capitol in room 4203 to talk about some of the programs that you're going to hear about to try to keep folks out of poverty or out of just helping folks along in this terrible economy that we're having. So I just bring you greetings from the state legislature. We look forward to hearing some of your comments later on today, and also wish all of us well during this very difficult time. So with that, I'm going to introduce my colleague, Senator Cedillo.
Good afternoon, everybody. Everybody's eating. Everybody's like, don't bug us, we're eating. Get out of the way of the television, we're eating. I am Gil Cedillo. I'm not the comedic relief. I'm actually a state senator. I'm going to turn my phone off right now, though, because my mother will call me in a second. And I'll say, Mom, I'm working, and then it'll take 15 minutes to hang up. She'll tell me she doesn't want to interrupt me. So, thank you for being here this afternoon. I'm really happy and pleased to be here. I represent the Latino Legislative Caucus, 26 members of the legislature, who represent a very diverse section of California. They represent communities that are reflective of all of California, a very significant portion of the future. What's important for us with respect to earned income tax credit. A bill I wrote, I'm so supportive of earned income tax credit, Dr. Ishidel, is that I wrote 2 bills for this in the year 2000, because I was so impressed with the program that I was trying to figure out how California could emulate the federal earned income tax credit. And at the time, California was flush with billions and billions of dollars of surplus. And so we had choices. We had strategic choices about how we should redistribute and invest those resources. And at the time, unfortunately, I lost out to the Speaker, Speaker Hertzberg, Speaker Villaraigosa, over whether or not we should put those resources into a California version of the earned income tax credit and couple it with the federal program, or should we do something called the vehicle license fee, also known as a car tax. I lost that debate amongst my 2 roommates. It was 2-1, and they beat up on me. And so we ended up doing this car tax and giving people the money back, much to the chagrin of Gray Davis and the electorate, and now we stand here with you today. The earned income tax credit is a remarkable program as a strategy to redistribute incredible wealth. And in California, as you know, the wealth is about $1.2, $1.4 billion that is not brought into our economy. And it's people like my parents who don't access these programs and yet suffer personally, individually, but as a community we suffer because we're not generating tax revenue, we're not supporting local businesses, and we're not creating jobs. And those are the fundamentals of what we need to turn this economy around. How to improve people's individual disposable income, how to help small businesses, and how to create jobs. And that's what the earned income tax credit does. It creates this opportunity for us to do all 3. And it's amazing because when you think about it, when you think about where this is targeted, it's targeted to people who will take these dollars, they're not going to put them in a savings account, they're not going to go buy stock in Toyota, they're not going to go create a hedge fund, they're not going to do any of these things. What they're going to do is they're going to go to their local cleaners, they're going to go to their local supermarket or their little tiendita, their little store, they're going to go fix their car, they're gonna, do a little maintenance around the house, go to a Costco, go to a Home Depot, or Walmart. They're gonna put this money back into the economy. They're gonna put it back into retail, they're gonna put it back into services, and we know that immediately brings us 10%. But also it brings us more when you think about the job creation. I think we project, doctor, up to 30,000?
33,000.
33,000 more or less, that's the doctor. 33,000 new jobs, which then again continues to spur the economy. And then you think about the other services and goods that are sold and provided for and created through the Earned Income Tax Credit. So for the Latino Legislative Caucus, this is something that we look forward to working with all of you who are here and trying to figure out, and I've actually charged some of the people who are here in the audience already, we've got to figure out, with the leadership of the First Lady, but also figure out, in an era of computers where you can check, you can have an idea, I get fascinated with myself, you can have an idea, and I'll ask my staff, who was the star of this movie? I think it was made in the 50s that had to do with boxing, and it's like Marlon Brando on the waterfront. Like the answer, before I could even think of the question. When we have that capacity to figure out how to retrieve information and how to communicate, we've got to have an ability, we have to have an electronic ability to create this electronic net to capture all the people who we need to get into this program so that we can bring those resources into our community, and then we can help spur the economy by improving people's individual lives, helping small businesses, and creating jobs. And so that's why I'm so happy to be here with you this afternoon. I thank you, and Doctor, I look forward to the release of your report, the publication, and making people aware. We look forward to working with the First Lady, and the Governor, and with all the stakeholders who are here today, and I thank you for your time. Good afternoon.
Wow, I can't tell you how exciting it is for me to hear someone speak so knowledgeably about the Earned Income Tax Credit, because very often when I tell people I want to talk to them about the Earned Income Tax Credit or the EITC, I get kind of a blank look. I think there's a lot of people who don't know that the Earned Income Tax Credit effectively gave a raise to 2.5 million working Californians last year that averaged about $1,900. They don't know, as Senator Cedillo was saying, how important these dollars are to the economy. Californians claimed $5 billion in refunds from this tax credit last year. And again, that fuels local business sales and creates local jobs. And I think people certainly don't realize that hundreds of thousands of Californians are missing out on this resource that is so important to families and so critical to our economy, which also takes a hit when these dollars go unclaimed. So I'm really delighted that you all are here today. And I really can't think of a better group of people to help us explore this topic about the Earned Income Tax Credit and what we can do in the next several weeks to make sure Californians claim more of these refunds that they're eligible for, and what we should be thinking about long term. I think we're first going to hear from Professor Antonio Avalos and Sean Alley. They are professors from Fresno State University, and they wrote the paper that's being released today. And for the first time, they've done an analysis looking across the state and looking at what these dollars really mean for local economies, how they help fuel them, and they also look at the cost to local economies, how they really take a hit when these refunds go unclaimed. They're going to make comments for about 10 minutes or so, and they've got a PowerPoint presentation. I think there's copies of that. You should have that. There's also a full copy of the report if you'd like that as well. And then after that, I'm going to lead a discussion amongst some of our panelists up here. And I'm going to ask them a few questions, and then we're going to open it up because we really want to get to your questions. I'd like to just introduce them real quickly. To my immediate left is John Wanchek. He is with the Center on Budget and Policy Priorities They're a policy institute in Washington, D.C. And John is really, for a lot of people around the country, the kind of go-to guy on the question of tax credits and refundable tax credits for lower and moderate income people. He leads their EITC outreach campaign, and he knows always kind of what proposals are advancing on the Hill, what's new kind of in regards to the credits this year in terms of eligibility and new and different credits. He also knows a lot about what's going on around the states, and there's a lot of innovative work being done in different states and communities to get the word out. So we're delighted you're here, John. And next, if we've got John who can give us the kind of 50,000-foot view from Washington, D.C., we have Kelly Batson here from the United Way of the Bay Area. Kelly, one thing she does is she is a volunteer tax preparer at a site in the Mission neighborhood in San Francisco. So she prepares people's taxes, and she also leads the United Way of the Bay Area, their free tax preparation campaign. It's called Earn It, Keep It, Save It. Last year, and Kelly, correct me if I'm wrong, this campaign did the tax returns for 47,000 folks throughout the Bay Area and brought more than $47 million in refunds back to Bay Area residents. And finally, we have Maricela Rodriguez. She is the program director for California's First Lady, Maria Shriver. And a few years ago, Maria Shriver started something called the We Connect campaign. She really saw that there were a lot of underused kind of resources and programs, and she designed this campaign to really let people know about these resources, make it easy for them to find out if they're eligible, and then make it easy for them to apply if they are eligible. So again, I'm just excited to have all of our panelists and all of you here. And so, Professor Avalos, if you can just get us started, that'd be great.
Thank you, and let me try without the mic. Can you hear me okay all the way in the back? The answer is no.
Can you hear me now?
No.
Thank you, and thank you on behalf of the California State University Fresno, in particular the Department of Economics. I don't think it's working well.
Can you hear me here?
Okay. Yeah. Try this one.
All right. Okay. A bit better, I think. I'll try with this one. I'll just speak louder. That's fine. Anyway, I'm just going to spend a few minutes taking you through the basics of the document that Anne was talking about. When you read the document, you will have more access to details regarding the counties and regarding the methodology that we follow. And of course, we will be happy to answer any questions that you may have when I'm done with this. One important purpose of this paper is to document all the numbers and all the ideas that Senator Cedillo and Anne have been talking about. Now we have a document that solidly, in a very solid way, demonstrates that these numbers are real. So what I am going to do very quickly is to explain in a very basic way what the EITC program is. As you can see, it's a refundable federal income tax credit. All this money, of course, is coming from taxpayers, and as Senator Cedillo said, it's just a redistribution mechanism that the federal government has to improve income distribution among the citizens of this country. So the basic way this works is that any person, whether they owe a tax or not, they can claim this credit when they meet certain requirements. You need a social security number, you need to be either a citizen or a legal resident of this country, and a few others. So basically this results in a tax refund if you qualify. Most researchers and most people in this country refer to this program as one of the most effective poverty alleviation policies. Mainly because different from other programs, other welfare programs, low-income support programs, this program doesn't have the typical collateral negative impacts. For example, the unemployment insurance sometimes is viewed as incentivizing people not to look for a job. But for this, to qualify for this program, you must have a job. You must have earned income. So this is actually a very important point, because there is some research out there that demonstrates that this program can in fact increase labor force participation rates, which is a very positive impact. Anyway, this is basically the way it works. Depending on the earned income that you demonstrate, you are going to get a tax credit. That also depends on the size of your household. The plateaus that you see on those pyramid-like charts demonstrate or show the maximum amount of credit that you can earn depending on your characteristics. For example, if you have 3 children, which is a new addition to the program this year, it used to be up to 2 children, but now you qualify if you have 3 children. The maximum amount that you qualify for is over $5,600. Which, for some of us perhaps is not a lot of money, but for low-income families, this tax credit can represent a significant boost to their income. Of course, the more money they make, the tax refund starts declining. So these numbers only show the maximum amounts. So as you can imagine, we have millions of people claiming this credit in California, and of course all of this money that is coming from the federal government to our state is injected into the Californian economy, and that of course produces significant benefits, not just the first time the money enters into the state, but when a person earns this money or gets this money and spends the money in your local, grocery store or in different places, that creates a ripple effect, what economists call a multiplier effect, that translates in a magnified impact that goes beyond the initial amount of dollars that were injected in the economy. Unfortunately, as you have heard, not all the money that we could claim is being claimed. A lot of these, dollars is being left in Washington. This EITC money never makes it into the state, and of course that produces what we are calling in our paper the foregone economic impact. Sometimes, and we will discuss these issues, residents in California do not claim this tax because they are not aware of the program. Sometimes they face language or cultural barriers. And sometimes they are afraid that by claiming this credit, this is going to disqualify them for other programs. So they think that they have to choose, which in most cases is not true. You can see in this map the EITC claims as a percentage of the total claims in 2006. And the only reason I want to show you this map is that, well, it all looks, some shade of green. This is a statewide issue. It's not particular to particular regions in the state. It's all over the state with significantly, larger percentages in states like the ones in the San Joaquin Valley, Fresno, Tulare, Kings, Madera. And since, we come from Fresno State, that's how we got interested into these issues, because high poverty rates in the state, in Fresno, imply also high EITC claims and so forth. Our main findings, the most recent data that we have available is 2006 at the zip code level. So to produce the county level data, we need to aggregate the zip code data and produce the county level data. So for 2006, we calculate that $4.5 billion were claimed. And that produced this impact in 2006, $1.2 billion in wages, $355 million in tax revenue, and $5 billion in business sales, adding 30,000 jobs to the economy. According to our calculations, in this year, 2009, which is not over yet because we're just about to file our 1040 returns this April 15th, so this is actually a forecast. We are estimating that California residents will claim almost $5 billion, producing these effects, nearly 33,000 new jobs. However, the subject matter of this important study is what We are not producing in terms of economic impact because we are not claiming the money. Around 1 in 5 eligible EITC claimants fail to claim the refunds. So we're talking about close to 800,000 people in California. And we estimate that in 2009, that will imply not claiming $1.2 billion, which could translate into this important impact: $1.4 billion in business sales, $342 million in wages, $97 million in tax revenue, and over 8,000 jobs in the economy of California. This, again, is one way to show this impact. This is the employment impact. And you can see that this impact is concentrated in some states, in some counties, specifically Fresno up there, and of course, Los Angeles, San Bernardino, Orange, Riverside, and San Diego counties. These numbers range from, almost 600 jobs all the way to 2,700 jobs per county. So this is actually something important that we believe should be addressed and should be documented. And that's what we have now in this report. Just to give you an idea of how close we are in terms of forecasting these numbers. The IRS released some preliminary data, and my laser is not working on that screen, but the third column, the third bar from left to right, your left, your right, shows these preliminary numbers. On green, you have the claimed EITC payments. On blue, you have the foregone EITC payments. So our numbers for 2009 are very, very close. And you perhaps were expecting to see the 2009 numbers a bit higher, and so did we. But perhaps what is happening is that we are underestimating the negative effect of the current recession taking place in our country. So we, all throughout the report, we made sure to use a very conservative approach. We didn't want to overstate, we didn't want to overestimate, we didn't want to over-forecast our numbers. And I think we did a good job that can be seen in these bars. We are very close to the preliminary numbers of the 2008 by the IRS, which are released at the state level. We cannot compare these numbers on a county basis because, unfortunately, the IRS data by zip code is released with a 2-year lag. So to have access to the 2007 numbers, we'll have to wait until sometime this spring. And there is nothing we can do about that. But anyway, this is what I wanted to talk to you about, and we'll be happy to take some questions after the floor is open.
Thank you so much, Professor Avalos. So let's kick off the conversation up here, and then we'll open it up for questions. So I'm just a little curious, Professor Avalos and Alice, what did you find to be the most surprising aspects of your findings?
Well, I have two. One surprising finding was that over the last 10 years or so, since 1996, 97, the accumulated amount of money that we have left in Washington is close to $10 billion. And perhaps some of the experts here in the panel can tell me this, and because I don't know if you can retroactively claim these funds. But if that's the case, we should also promote that effort, because we are talking about the impact on an annual basis. And if you go back in time, you can bring a lot more money than the current year. The other important finding, and I think it's kind of surprising, is that, well, you probably are thinking, how big is this impact in relationship to the size of the California economy? And I have made some calculations here, just to say the following. Without the EITC program this year, that would mean that we would lose, close to 30,000 people. So 30,000 more people will be without jobs, right? That implies an increment of 0.2 percentage point in the unemployment rate. So This would mean that the current unemployment rate in California, at least the latest number that we have for January 2010, which is 12.5%, would jump to 12.7%. So it's a minor dent or not. I don't really know. If you should qualify this as a small or large. But this to me is something that should be taken into consideration. The program can significantly alleviate unemployment problems in the state.
I'm going to pass the mic over to John Wamchuk at the Center on Budget and Policy Priorities. John, give us the view from DC on refundable tax credits right now for low-income families. What's really new and different this year that we need to know about?
Well, the economic recovery legislation last year, that people call ARA, expanded the earned income credit and also a corollary credit, the child tax credit, that many of these families can claim both. And so right now, starting in January until April 15th, folks are claiming credits based on those expansions. And the professor noted that 5657 was the top potential earned income credit amount, and that's for families with 3 or more children who are earning between say $16,000 and $21,000. So sort of targeted at the near full-time minimum wage worker level. So the child tax credit was increased significantly because workers now who earn just over $3,000 can qualify for a refund through the child tax credit in addition to whatever they get from the earned income credit. It used to be that they had to, over the years, they had to earn about $12,000 before they even became eligible. And just to underline, a full-time minimum wage worker with 2 children gets an extra $1,800 out of that credit now, whereas last year they would have only gotten about $300. So these dollars, which were talked about last year as stimulus dollars, they're now arriving in the form of the IRS refund checks. These expansions will be good through next year, and the president has proposed to make them permanent beyond next year, and that'll get decided as Congress deliberates the president's budget proposal later this year. There are some other tax credit issues involved with that I can talk about later.
And Sean, Professor Avalos touched on this, but tell us a little more about who tends to miss out on these tax credits and why.
Well, first of all, by and large, it's people who are not filing tax returns at all. So the IRS is not exactly collecting detailed information about who they are, because they don't know exactly who they are. So we have to kind of go at it from some different directions. And what research studies and observations by outreach campaigns like Earn It, Keep It, Save It have found over the years is that low-income, self-employed workers may frequently not claim the credit because they're not getting W-2s. They may not be keeping documentation of their earnings. They may be not really aware until maybe they approached the idea of filing a tax return that being self-employed, you owe 15% of your wages as self-employment taxes. Those are your Social Security payments. Well, it's the end of the year. You don't have those dollars anymore. They've been spent because you didn't know about it. These are not folks who are doing estimated taxes when they're getting jobs at a day labor center or working part-time construction, whatever. So we think those folks are at high risk of not claiming. We think that there are other categories. For instance, there's unfortunately a lot of grandparents who, instead of retiring, are still working, and it turns out they're caring for a grandchild. And they may be eligible, they are eligible for the earned income credit if they earn below the required amount. That child is one that they can claim if the parent is not in the picture. But they may not know that, and they may be so low income that they weren't filing returns anymore once they reached retirement age. Maybe a little bit of Social Security was coming in, but they kept on working. They didn't earn enough to even have to file a return. So that's another kind of category. It's folks who are you know, it's not someone who is working $30,000 a year with kids who's you know, got a tax bite that they need to take care of by filing a tax return. They kind of get the idea. It's folks at the edges of eligibility when they haven't been filing returns, they haven't seen a reason to, or now, you know, that might have been the case before. Now they've got a child, there's a reason to, but now they're scared to death that they come forward. The IRS will swoop in and punish them for not having filed in previous years. There's a lot of help people can get through programs like Earn It, Keep It, Save It to actually connect them to tax counseling, advice, and even legal representation to help them with that if they're in that kind of a bind. A lot of times they fear they are, but they aren't really, because they don't realize they never earned enough to owe anything.
Thanks. Thanks, John. Kelly, you manage a lot of free tax preparation sites in the Bay Area, and you actually do taxes yourself. Give us a sense of what goes on at these free tax prep sites. How do you reach people like John described? And really, what's the state of free tax preparation across California?
Well, in general, Earn It, Keep It, Save It is a collaborative effort of lots of different free tax preparation providers, AARP, TaxAid, VITA, and other groups, including TaxAid. And all of our sites are so different, run by different kinds of organizations. I really think that that's part of meeting people where they're at, putting free tax preparation in a trusted organization in the community, and people are more likely to go there. So in general, our sites are really seeing a lot of it. They booked up right away. You know, as soon as things opened, we were packed and everyone was really busy. We always see a little lull in March, and then, you know, we're busy again. We see all kinds of clients. And our sites are really just trying to meet the need, and we're doing lots of education. I think that that's key. Just trying to tell people who don't really know they should file that they need to file and claim this credit is really difficult. Like John said, we don't know what we don't know, and we can't contact the people that aren't filing. But it really is those people who don't have a filing requirement that I think we're missing that could be getting this huge check at tax time. And in general, I think a lot of the tax prep coalitions across the state are really different. We had the opportunity to meet with some people last summer that are running different coalitions in the Northern California area. And I think there's very robust programs and not so robust. Not a lot of organizations, you know, are connecting. And I really think that that is something that is, you know, really crucial. Is, you know, when we have a coalition working together to do all these things, it really makes a lot more people, lots of different kinds of things. So I really think that that's really, everyone's in a different place. We're all, you know, we've been doing this since 2003, but some people are just starting, and it's really just hard to help everyone with the same thing, you know, just because we're all in different places.
And who's a typical person who kind of comes through the door? And do you guys focus on taxes, or are there other things that you all let them know about?
Sure. Well, lots of our other organizations that we work with that do VITA, they, I think they use VITA and free tax preparation as a gateway to bring people in for all the other services they offer. And sometimes it works in the reverse, where they offer all these other services, and this is one more thing that they can offer their clients. I've heard that from plenty of organizations. That's really why they decided to become a free tax preparation site. So that happens a lot. We connect a lot of people with bank accounts, with you know, benefits screening, or, you know, all kinds of things like that. We do credit report pulling, those kind of things, where we're just connecting people. Most of our sites see it as a real opportunity to talk about financial situations with families, which sometimes are uncomfortable, and this is really an opportunity just to bring that all up, and families seem to go along with that. Most people don't want to do all of that when they're sitting there to get their taxes done. They want to get their taxes done and get out, but lots of people are willing to come back. The clients that we're seeing, we see a lot of single filers, and over the last couple of years I've seen a lot more single filers qualifying for the earned income tax credit, which is hard to do. I don't know if you know the limit for a single filer with no dependents, but it's like $13,000 this year. Yeah, and it's, I mean, it's not as huge of a credit as the other, as much as a family can get, but I think it's pretty interesting that, you know, we get lots of people making under $13,000, and in California that's, you know, not enough to live on, and in the Bay Area that's certainly not enough to live on, and that's just a struggle we see. We see lots of immigrant families, lots of immigrant workers that aren't wanting to pay or are wanting to pay. You know, they only make $12,000 all year, and they want to pay the $2,000 in self-employment taxes that they just, you know, So it's really amazing. We see our average gross income, or adjusted gross income, is about $20,000 with all of our sites. And you know, that's really where the biggest percentage is around 20 to 30,000. It's probably 80% of the clients that we see. So we know that that is not enough to live here. And so this is the largest payment people get all year.
Okay, thanks so much. Maricela, tell us, what was the initial impetus for the We Connect campaign, and what can we expect this year, and how can people in this room get involved?
Well, for those of you who know the First Lady, you know that poverty issues have always been very close to her heart. And when she became First Lady, she wanted to find ways to help low-income families in ways where we didn't have to create a new program, we didn't have to pass a law. And she'd realized that sometimes government doesn't always do a good job about connecting families to resources that are available to them. And I have to say that, Ann, you were the first person to talk to Maria about the earned income tax credit. And you know, as you've mentioned, when you say that to someone, they don't really know right away what is it. But she understood that it can mean, you know, a few hundred to a few $1,000s to a family who's working hard and still having a hard time making ends meet. And so she really has made a lot of effort to create a statewide message around the earned income tax credit. We've built a lot of really great partnerships with churches, with anyone who, as Kelly mentioned, serves as a trusted messenger. We've built a website, and this year we're moving into really expanding on WeConnect's work. What started as an earned income tax credit initiative has really grown into a program where we connect families to a lot of different programs, realizing that the EITC really means that families are eligible for other kinds of programs. And so we've taken it national. We've started talking to governors about it. They get it. We just were at the National Governors Association meeting, showed it to additional governors, and the energy behind it is really great. We're really looking forward to that. In March, we're doing two big events, one in Fresno, one in LA, which I think meets the highest need areas. 3-day events. We're staying put. We're doing a really focused effort in connecting families to pre-tax preparation, food distribution, job assistance, housing, all in one place. And that really has been the goal for We Connect, is to really help families connect to resources all in one place.
Oh, that's great. Thanks so much. John, so many more people are eligible this year, given what's going on in the economy. Are other states doing anything to reach people that we could really learn from here in California?
Well, I think realistically, a lot of states are still, grappling with what do we do differently, if anything, to try to reach folks who have dropped from earning too much to qualify for the earned income credit to now being eligible, but they don't realize it. It's sort of figuring out what different messages to put out and what different channels to use. Some things that we've thought about and have seen programs like Kelly's use in different places around the country is to focus in on credit counseling or money management programs that are helping people who are in financial difficulty. You might say that the first thing that someone who is in financial difficulty should do is make sure they file a tax return, but in their minds they might be saying, well, I can't afford to pay the bill, so, and it's super anxiety attack to even look at the Form 1040 with the way my situation is now, so they may put it off and delay it. And it's so important for a financial counselor to say, it's really in your self-interest to do this return, because now you're eligible for the earned income credit. You're eligible for more out of the child tax credit than you would have thought of. There may be some other things that people can qualify for as well through the tax system. And a related area is programs that are doing home mortgage counseling for people who are in fear of foreclosure, where for them, They may be in a similar circumstance of, shying away from filing a return, and for them, a few $1,000s credit might not make all the difference in their foreclosure situation, but it sure can't hurt. So I think those are some of the things. There's also, as people have been downsized, lost employment, they may be looking to more day labor kinds of situations, part-time work, so that the ways of contacting those folks may be different. So I think that people are still trying to explore what is the best way to do that. There's a couple of states, which is starting to get into sensitive budget territory, but there's a couple of states, Virginia and Louisiana, that actually do a grant program to community organizations to run EITC outreach and provide assistance programs. These are not big dollar things. They're less than $1 million in Louisiana and less than $500,000 in Virginia. But that's a way to provide a little more bloodstream to the organizations to be able to get out and reach different sectors of the community than they have before, recruit more volunteers, and that's another way that states have been able to respond in the last few years to the worsening economy.
Are there any enhancements or proposals that are kind of moving in DC right now to strengthen these credits or that otherwise impact them?
Well, I think the big lift will be whether or not these expansions that people can claim right now, will they stay alive after 2011? And of course, that'll probably start to get, the president's budget is going to be very political around tax issues in general, about high income tax cuts and so forth. And so how this will play out for these credits, it remains to be seen. There also is, the president has proposed making another existing credit, the Savers Credit, for retirement contributions that a family makes. Right now, if you don't earn enough to owe income tax, you could be putting money into an IRA, but you don't qualify for that tax credit the way a higher income family does, which could be worth $1,000 or $2,000 off the taxes. The president has proposed to make that credit available to folks who are making retirement contributions, but they're not earning enough to owe income tax or owe very little income tax and can't take advantage of the current credit. So that's a new feature that's been proposed. Also, there's, child care expenses are kind of excruciating for a lot of families. There's a child and dependent care credit that's been around for a long time. Again, it only benefits people who earn enough to owe income tax. There are some whispers about trying to make that credit available further down the income scale. But that isn't as far along. It's not in the president's budget. There is a proposal to expand it to the value of that credit for middle and upper middle income parents, and then also expand the child subsidy funds that would go out to states for lower income parents. So that's the way the administration is proposed to deal with that.
I know right now we're really focused on the next couple weeks and getting the word out, encouraging people to file a return, but if we step back, kind of what long term do you think we should be thinking about, both in Sacramento and in DC, to encourage people to file these returns, make sure they're able to take advantage of resources that they're eligible for?
Well, I think there's some different kinds of creative initiatives that, Kelly's suggestion about sort of coalescing programs, not necessarily formally, but getting together people who've been doing this for a while, who've been doing this just for a short time, or who are looking to sort of fill a gap in a county that doesn't have help resources available right now, can spark a lot of creative ideas. And pulling in ideas from places in other states can be helpful. On a national scale, there's an organization, used to be called the Corporation for Enterprise Development, CFED, that is an economic development organization, has a self-employment initiative And what it does is work with programs to build their capacity to do the more complicated returns that someone who's self-employed has. It may come as a surprise to you that the training of volunteers at these tax sites, the basic training doesn't include anything but the most simple self-employment returns. So if you get a cab driver, child daycare center operator, it's too complicated for the average volunteer. So what this initiative is doing is counseling with programs to help them build their capacity by grafting on additional training, figuring out what resources otherwise in the community people could be referred to get that help, so that when someone comes to a program, they aren't turned away and saying, maybe you ought to go see an accountant. It's more like, we can help you right here, because if they're low income, they're not going to go out and pay an accountant. So I think that's something to take advantage of, and plan for, once April 15th is over with, then you can start planning for the next campaign, and that's the way to look at it. There's, just to mention quickly, there's a program in Minnesota that just found that it could not build these health coalitions in every rural county, and it was a very rural state. So it was great in the urban areas and suburbs, but beyond that, it's pretty tough. So they started to set up a remote filing system where they would build partnerships with agencies in the rural community where a client could come in, and what the local agency would do is provide the fax machine, the fax tax information elsewhere to a program like Kelly's. They would work up the numbers, and then through the magic of webcams and Skype, which is all worked out with the partners, the person in Kelly's office could have the interview directly with the filer out in the rural county. And so they would be able to question them about their eligibility, family circumstances, all the things you need to do to make sure you have an accurate return. Those are the kinds of things to, kick around like in an exploratory fashion. How would that work in, some of those light green areas on the professor's map that, it seems like there ought to be more people claiming the credit from those areas, but it's awfully rural, and if you look up on the WeConnect site, you have to go 15 miles to find one place, and it's open 10 to noon, and that's not WeConnect's fault. It's just that the programs in the county haven't been built yet.
So this is going to be the last question just before we open it up. Professors Avalos and Ali, you found in your research that increasing the take-up of the earned income tax credit, if more people claim it, more dollars kind of ripple throughout the economy, that'll eventually mean more tax revenues for state and local governments. How do you think policymakers should really take this into consideration when they think about policies to boost take-up rates?
Well, in these days where there are a lot of government shortfalls and stuff, that extra money, we predicted maybe $100 million in state and local governments in 2009 alone. I mean, that could help shore up a lot of balance sheets, so they could take advantage of that. I think it would also be important to explain to them how this serves their own narrow self-interest, even if you're trying to get them motivated. In addition to helping their constituents and the people it's intended for, this money goes out and gets spent and respent and respent, and so we get a lot of economic output, a lot of new taxes, and a lot of new jobs among their constituents, which could be happy voters come next election time. So it could help them out, I think, in a lot of ways, and things that, their own narrow self-interest. And Senator Cedillo sort of foreshadowed what else I was going to say about this, is that they don't have to wait a long time for this impact because of the demographic profile of the earned income tax claimant. The savings rate is zero, essentially. That the money's going to get spent as soon as the checks get cut. So it's not like a big public works project that there's going to be a long planning process before any checks get cut. This money hits the economy probably within a month.
Great, great. Let's open it up for questions. Anyone? Anybody? Yes, you, sir.
Probably hundreds of thousands of undocumented workers who work in places where they have their Social Security taken out, and the numbers don't match with the magic computer in the sky. So Are they willing to, I mean, this would be really nice for them. They don't get their 15% is gone unless we find the tax legislation to get the benefits from it. Are they willing to file income taxes then to, even though the Social Security number probably isn't correct, and get the credit that they should get for their families and themselves?
Well, according to the IRS, if you live here over half the year, you're a resident for tax purposes. And so the IRS will assign you what's called an ITIN, which is Individual Taxpayer Identification Number. So yes, we have lots and lots of undocumented workers that are coming in, wanting to file their taxes, wanting to apply for this ITIN, which is not an easy process, let me tell you. And lots of people can probably talk about that here in this room. And unfortunately, they don't qualify for the earned income tax credit. And the only other credit they don't qualify for right now is the making work pay credit that's part of the economic recovery legislation. But they qualify for all the others, and you'd be amazed at how much they can still get back. And making so little, they just keep track of things at their day labor and they're getting paid cash. But lots and lots of undocumented workers are coming into our sites in the Bay Area, and I know across the state. So it's still a good benefit for them.
Actually, a question for Kelly. Does United Way, do they have a similar program here in Sacramento in terms of what they do down in the Bay Area?
Well, the thing about United Way and Free Tax Prep is that United Way plays different roles in different coalitions. So we're not, we get questions about other parts of the state. And I know that you could probably call 211 here and get a place where to get free tax help. I don't know who the lead is here. I want to say it's a Sacramento coalition for something. What's the name? Yeah, so I just looked it up. I Googled it myself just a couple weeks ago to tell someone. So everyone plays different roles in all the different coalitions across the country and across the state. But there's definitely someone here that's helping to get free tax preparation off the ground and working with local organizations to do it.
I'm the chairman of the, thanks. My name is Sean Casey. I'm the chair of the Contra Costa Family Economic Security Partnership, which is one of the Bay Area partners with United Way. I just want to say, to really do this right as a local coalition, this is a year-round effort. It is not just a tax season thing that we start, January 1st. To do this program and to really make the outreach to get that extra uptake requires a couple hundred volunteers in our county. It requires a lot of training. It requires getting nonprofits to collaborate when there's not a lot of money for their effort. To me, I think a big policy area really should be where can we get state and federal support for local coalitions, knowing that for a $100,000 investment locally, we're talking about a couple $1 million coming back into the economy. So, I mean, there's a multiplier effect in that as well. But I think it would really be very helpful for us trying to do this pretty much as a stone soup effort locally if the New America Foundation and others can really educate policymakers on a very modest investment that would really have that local multiplier effect. United Way's done a great job, but they can't do it all, and they can't do it in 58 counties. That's not really a question, is it?
I'm glad you raised it.
Thank you. My name is Dan Oakenfuss. I work for State Assemblyman Ted Lieu. I want to draw attention to a law that we partnered with the First Lady's office about 3 years ago, which required employers to put in with employee W-2s a notice, a simple notice that says, you may qualify for the EITC, and directs them to look at the IRS website and the IRS 800 number. In fact, in your WeConnect folder, it's over there. There's a nice little card that says, have you heard? There's a law that requires you to notify your employees. But that's a fine example of businesses, government, and the nonprofit, because we had New America as a sponsor of the bill, all got together and thought of a solution that would be a cheap way to get the word out. So, thanks the First Lady's office for helping us out with that one.
I'm Tim Reese with California Nevada Community Action Partnership, and we have a modestly funded statewide project, Community Action Sharing Hope, which is around EITC for low-income communities. The question I have is, it's sometimes problematic, particularly in rural communities, to have VITA sites at convenient locations, convenient times, and with adequate trained volunteers. What is being done to promote e-file as an alternative for VITA sites?
And by e-file, you mean self-preparation?
Correct.
Doing it online?
We have one partner, Legal Aid of Orange County, who has put together a program called I Can E-File, and I believe it's available in other states as well. But they've done a really great job in making this program easy for families who may have never used a computer before, answer questions and file their taxes online for both the state as well. And in working with them, they've always come back to us to say, we've gotten new partners to jump on board to promote this resource. We've doubled our numbers, we've tripled our numbers. So I know that they serve as an example of something that's being done in the state.
I can add someone if you like.
Sean?
Well, first of all, that was the point I was making about the Minnesota program as an alternative way so that rural agency doesn't have to learn how to do all that stuff, but it can sort of outsource it and use technology to connect the client to the repair. But another thing which I'm not sure what the roots are at this point, and this is probably, hopefully, something that will continue next year as well, but Walmart and United Way of America in a program called One Economy, which does an on-site money assistance program called beehive.com, have collaborated to do a mobile van circuit tour of various routes around the country. And I know last year they did a route in California, and I think that's something where what happens is that a van that's equipped with laptop stations with this tax filing software that people can use themselves is in the van, and in addition, coaches are there to help out if people have questions or if someone comes in and they really can't manage the software on their own. They can actually help them the way a VITA volunteer would do. And that's the kind of thing that I think, sort of increasing the demand on that kind of a program to reach communities that van hasn't come to yet might be a way to expand that. And this is something that the Walmart Foundation funded.
Any more questions?
Hi, my name is Rubina Sur, and I'm the Executive Director for Community Partnership for Families of San Joaquin from San Joaquin County. When you were talking about it, we have partnership with WorkNet, library, different people who have the mobile units who are going in the community anyway, to provide the services. So we have our volunteers going on this mobile unit to provide the VITA at where we don't have actual sites. So it has been really great partnership, partnering with the agencies who already have mobile units, that go just going in San Joaquin County, and WorkNet has it, Stockton Library has it, many other human development has it. So there are many people who does that. So.
Yeah, we heard that last year there was a homeless program in Petaluma that worked with a local library that had VITA volunteers to get their teams to come out to transitional housing and emergency shelter operations to do people's tax returns there. So that's sort of along those same lines where it wasn't a big program, it didn't cost a lot of money, it just meant sitting down and working out the relationship.
So I think we want to be respectful of people's time. Thank you so much, all of you, for being here. I really want to thank all of our panelists. I also want to thank the California Department of Community Services and Development, who provided funding for this research. And we're going to be getting this research out to legislators and out to communities kind of throughout California, so that they can use it as a press outreach tool and as an advocacy tool, because this has a lot of good local numbers in it that I think people can use. So thank you again so much for your time. And I think a couple of us are going to stick around, so please come up if you have any more questions. Thank you.